Our goal here in this market is to have a steadily rising equity curve, and over a long period of time, anywhere between 2, 3, 4, 5 years, your lifespan in this market can really be interesting and not dwindling like everybody else. 90% of the crypto space and the forex space is losing money, and that is an actual fact. And it is because they're doing things like, okay, what is going on, CYPRX YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, I thought that I would just upload the Zoom call that I did, the public Zoom call that I had posted on my Twitter page, telling you guys that I was going to fully break down a QNT trade. There was over, I believe, 10 or 11 participants on the Zoom call, if I'm not mistaken. I didn't check the number, but I thought that I'd share this for any of the individuals that missed out on that public announcement. I usually tend, after I place a nice, decent trade, if I'm going to break that down, I like to do it over a Zoom call. That way it opens the floor for any questions after the breakdown is over. And I announce it anywhere between 30 minutes to an hour prior to the breakdown. So if you guys don't follow me on Twitter, make sure that you guys do so. At @cdomanicore is my Twitter handle, or you guys can click the link in the description down below where it says Twitter handle, and it'll take you directly to my Twitter page. I'm almost 110% sure we're shadow banned on Twitter, so it might be hard for you to search my Twitter handle to find my page. So it's just best that you click the link in the description down below. Without further ado, let's jump into this QNT trade where I made roughly around 20% gains on the overall capital that I pumped into the market. Very interesting breakdown for you all. Nice little buy position during London session, fully breaking down the trade for you guys. If anybody's interested in that CYPRX mentorship, that link is in the description down below. If you guys want to schedule a Zoom call with me to ask any personal questions that you may have on my behalf, you're more than welcome to do so by emailing the customer support team. Without further ado, let's jump into today's video breakdown. Some CYPRX students here, some people that are just on the public space, public domains that I post on Twitter. So welcome. Today we're going to go over how I made about roughly around $1,350, about a 20% gain on a $7,000 investment. Can you guys hear me okay? Somebody say yeah real quick, or just post in the chat.
Yeah, we can hear you.
Cool. Made roughly around $1,350 post fees. Put in a little buy position on QNT. CYPRX confluences to the T. I'm going to go over that. We're going to go over bank and institutional piggyback methodologies. We're going to go over areas of liquidity, logical targets based off of where the bank and institutions are most likely going to target, based off of what it is that they're telling us in the current price action that they're printing, right? Identifying bullish order flow in the sense of them consistently grabbing lows and making new highs, right? That's identifying bullish order flow, which clearly means that they're targeting external liquidity, right? So I'm going to go over all that stuff today, guys and gals. Thank you, and I do appreciate you all for joining in on these Zoom calls. I love the fact that the CYPRX community, regardless if you're a student or not, the teachings that we host here at CYPRX are really waking people up, hopefully giving you guys the advantage on the charts to, have a steady rising equity curve. Okay. Pretty much just to letting you guys know what we're going to go over in today's Zoom call. Thank you all again for joining. Really do appreciate the love and the support that everybody shows the CYPRX community. We're doing big things here with CYPRX. Really attempted to show people no gimmicks, no smoke here, no bullish price predictions, understanding as an investor from a cryptocurrency or forex investor's perspective. We're not here to become millionaires overnight. Our goal here in this market is to have a steadily rising equity curve, and over a long period of time, anywhere between 2, 3, 4, 5 years, your lifespan in this market can really be interesting and not dwindling like everybody else. 90% of the crypto space and the forex space is losing money, and that is an actual fact. And it is because they're doing things like following people's price predictions, buying in at the wrong point in time, not understanding how to take profit properly, not understanding how to protect their capital, utilizing a protective stop loss. All of these things that we go over on a beginner and intermediate perspective in the CYPRX course material and on the YouTube and things of that nature. Hopefully you guys are picking up some of these gems and implementing them on your trading, regardless if you're a CYPRX student or not. Hopefully we're really touching home for you and giving you a more realistic perspective in this market. I think that one of the main things that I struggled with as a beginner trader, I'd say like the first 2 to 3 years in my trading career, was finding good, accurate information. So when I became a profitable trader, it was always a dream of mine to come into this space and give people real value instead of giving them all of this smoke and mirrors, like 90% of these freaking just, oh man, this market. I don't know why. I really don't know why. It's everybody's goal as an influencer to lie to people and misconstrue them, if that's a word, if that's a proper vocabulary word, lead them in the wrong direction, right? Take them into a dark tunnel and continuously lead them down a dark tunnel. Why does nobody want to be a light in this trading community? It's so just honestly disgusting in my personal opinion. It says a lot about people's character. Let's just put it that way. All right. I'm done ranting. Let's share my screen real fast and we'll go ahead and go over this breakdown. All right. So if you guys follow me on Twitter, I'd been mentioning to you guys subliminally that I was purchasing QNT. I said here in a tweet, red alert, 10 QNT is less than $500 right now. Just saying. Another tweet right here, public service announcement, 2 QNTs equal to $100. Don't sleep, not financial advice. Just subliminally messaging people, telling them, that I'm personally investing in QNT. I like to let people know that I'm, building up my bags for QNT. I bought a very significant amount of QNT. I'm now a holder of over 100 tokens, which is absolutely phenomenal. I never thought that I'd actually get the opportunity to buy QNT at these discounted levels. But from its all-time high at around 400 and some odd dollars, $43 in my personal opinion is a steal. Could QNT go lower? Absolutely. I think right now we're building a buy trap in the form of this trend line liquidity right now. You guys can kind of clearly see that. So as of right now, I'm expecting this to get taken out. All right, we trade against retail methodologies. So with that all being said, I've taken partials from this trade. I made about $1,350 on a $7,000 initial investment. So why was I placing this trade? We're going to start on the 15-minute chart. I'm going to utilize that as our higher time frame analysis. We're going to go back 1, 2, 3, 4 sessions and talk about the price action that I was looking at. A lot of people will say hindsight testing is crap. You guys know that I've disproved that multiple times because coming into this London session, I stayed up last night. My fiance was super irritated with me because I was sitting there looking at my charts at like 1, 2, 3 o'clock in the morning. She was like telling me to go to sleep, and I was telling her, no, there's a beautiful setup on QNT about to take place. And here it is. Okay. So took this trade during London session last night here in California, that it starts at about 12 p.m. Pacific Standard, 12 a.m. Pacific Standard Time, and then goes and runs till about 3:30 in the morning Pacific Standard Time. That's my personal window of opportunity to trade London session. So if you're on Pacific Standard Time, take that as a note. That I look for trades personally as a 3-hour window of opportunity between 12 a.m. and 3 a.m. Pacific Standard Time. So correlate that with your, your international time zone. We'll go from there. Okay. A lot of people don't understand time zones and sessions in the market. I think that that's another thing that I've gained clarity on in this market space, is a lot of people will just tell you, technical analysis and things of that nature, but I actually break down specific times and executional patterns in the market via different sessions that you should be looking at as an investor. We're not just looking to buy random price action. We're actually looking to move in tandem with when the banking institutional order flow comes into the market. And yes, that is at a specific point in time. Now, the CYPRX students have those actual specific point in times via the specific window of opportunities that I've given them. I've tried and been a little generic with you guys on YouTube, dropping you little gems here and there on when those times are. Hopefully you've picked up on those, okay? But all of my trades exist in that window of opportunity, whether it's the London or New York session. I'm not an Asia session trader. So naturally, I'm a London and New York session trader. Okay. So going back, what do we see on price action? How I was able to catch this trade? The main logic behind this trade was me targeting this liquidity up here. We see a retail pattern trap in the form of a double top formation or retail resistance here in this area, where we can imagine retail traders during these 2 New York sessions or these 2 London sessions, whichever one you want to correlate that with, okay, we're taking over leveraged sell positions or even had buy stops above these 2 highs. So we have over leveraged sell positions. You guys can kind of fathom that. And then we also have people that were going to be willing to take buy positions above these highs in the form of buy stops if the market ever superseded these areas. Okay, so this is an imaginary area of liquidity that us as retail traders utilizing TradingView can see on the charts, yet we cannot confirm that there is liquidity above these highs. We just can see that via price action. Now to the downside, what can we see? We can see that every single Asia session, so we see an Asia session here, we see an Asia session here in this general vicinity, we see the market grab liquidity from lows and make new session highs. Same thing here, we see an Asia session, grab liquidity from a low and make new session highs. Same thing here. We see an Asia session, grab liquidity from a low and make new session highs. So when I see this type of price action, I can see one of two things. One thing via the market is still in a temporary bearish trend. So the market is right now building liquidity to the downside. And I identified that to you guys by this trend line here. Okay. But we also see the market makers building liquidity to the upside in the form of retail pattern traps. And we know, based off of what I've taught you guys in the CYPRX content and on the YouTube channel, that in order for the market to go lower, it must first do what? It must go higher. Okay. So when I see this type of price action, all I'm thinking is buy opportunities if the market continues this trend to grab this liquidity up here. And then we will react to price action to see if this is going to be a bullish reversal where the market moves swiftly through this area of liquidity and consistently prints the definition of an uptrend, higher highs, higher lows, or if the market utilizes this area of interest as a catalyst to move in tandem with what the bank and institutions like to do, is sell from a premium where they grab liquidity from highs to then make new lows. Okay, so that was my ideology, and my logic behind placing this trade is I had a reasonable target area, and you should actually have those if you're looking to take buy or sell positions. A lot of people just go aimlessly through the market and they seek to just make money randomly. You're not going to make money randomly in this market. You have to have a reason behind why you are trading these markets. Okay, and if that reason isn't surrounding targeting liquidity, 9 times out of 10, you're going to lose in this market, or you are going to be the liquidity provider for these markets. What does that mean? You are going to be the person that gets liquidated from these markets to provide traders like myself and the other CYPRX traders who know for a fact that we hunt stop losses. And that is what the bank and institutions do. They hunt areas of liquidity. So coming into this London session, we had all of that price action information. So breaking all of that down to you guys, showing you all this liquidity trap, we come over here to these 2 previous New York sessions. And I want to show you guys bullish order flow on the fractal nature of things. So now we're going to jump down. Actually, no, we're not going to jump down just yet. So this New York session right here, which was Friday, if I'm not mistaken, what's today, June 18th? Okay, no, this was Thursday's price action. We see the same buy trap, okay, or we see the same buy order flow where the market makers grab liquidity from lows. Here you can see that, okay? They grab liquidity from their previous buy. So here's a New York session right here. Here's a New York session. They grab liquidity from the previous New York session. They respected the previous Asia session low, which was around the psychological level, 42.5 cents. You guys can see that that average buy-in price for the banking institutions was around 42.5 cents. And they bought that price action, liquidating their previous area of interest or their previous buy positions and liquidating the manipulation window. So just kind of jumping into this area here. If we highlight the manipulation window, I'm not going to, because you guys are on Twitter space right now, you're coming from the Twitter space, I'm not going to give you guys those exact times, but we know that previous to every single New York, London, and Asia session, there's a manipulation window here. So we can see that manipulation window right here. And what do we see, guys and gals, right here in this area of form? What is this pattern right here? This is a double bottom formation in the manipulation window. And this is real clutch when you can see a double bottom and a double top formation form in the manipulation window. So we have 2 areas of liquidity right here above highs and beneath lows that the market makers just so happen to formulate in their manipulation window. So what were they doing? They broke out of that manipulation window. The market makers targeted that liquidity to give themselves discount from where bank and institutions the previous day's open bought from, or the previous daily buy area bought from, the average price at 42.5 cents. And then New York session took buy positions. We know that New York session is not going to buy from a high. And we can see here that they got past price action at a high. Dang it, come on, click. There we go. They got past price action at a high. How can we identify that? Because here is a low, here is a high. When New York session opened, they manipulated price to build more liquidity in the form of a retail resistance pattern to build more liquidity to the downside. Then they took sell positions to give themselves discount. And then right before their session ended, before they passed price action over to Asia, they took their buy position. And that just so happened to be at 42.5 cents. Now, the CYPRX students know that I like to utilize the piggyback methodology. So I will highlight from the candlestick bodies down to the wick. We extend that over to the right-hand side. So that way in future areas, we know that if price gets pushed down into this general vicinity and we hold it as a bullish quote unquote supportive region or demand region, we know what the banking institutions are doing. They're looking to buy at the same price or discounted price from where they bought from the previous day. Okay. Now, coming over here to this New York session, what do we see? We see them create a liquidity trap. All right. I talk about this on the CYPRX advanced course material. We're halfway through a bullish leg where we can see the daily candlestick opens right here. Okay. The daily candlestick opens about an hour before Tokyo session opens. They liquidate these areas right here. So all of these lows or these over leveraged buy positions, they push into that area of interest. And then they start to print the definition of bullish order flow: higher high, higher low, higher high, right? Now, so coming into this London session, I tell the CYPRX students that midway, right, between the daily candlestick open and bullish order flow, they leave behind a liquidity trap. We can see that this New York session left behind the liquidity trap where we have an intermediary low or an internal liquidity area where the banking institutions are going to seek to grab that low to then push price higher to target other areas of liquidity, i.e. external liquidity. External liquidity being liquidity above highs, internal liquidity and bullish order flow being liquidity beneath lows. Okay. All right. So coming over here now to this London session, right? So now you guys have my entire breakdown coming into this London session, and every single thing that I was looking at, all I said to myself was, if we can hold these two areas of interest and we can grab this area as an area of internal liquidity and respect the previous area where New York and Asia session bought from, but we can clearly see this is a London session low right here. So if I even take this this low that we identified and we extend it over to the London session low, we can see how they bought from this low at 42.5 cents. Then we know what the bank and institutional traders are doing. They are consistently putting in buy positions, as you can see from these lows, and targeting external liquidity above highs. Okay. So you can see how every single manipulation window, the bank and institutions, I'll just identify that for you guys, consistently set up liquidity traps above highs every single manipulation window. Let's just go ahead and identify those so you guys can actually see what I'm talking about. So we see a manipulation window high here, a liquidity trap set. We see a liquidity trap set here. We see a liquidity trap set here. These are all manipulation window liquidity highs. Okay. Then we see another one here. And then we see another one here. Okay. So coming into this London session, what do we know? We know that if this London session low, previous to this London session that we're trying to operate in, is not broken, then what does that mean? Logically speaking, if we are not creating new lows, then what are we going to attempt to do? If we are not creating lower lows and lower highs like this, okay, and you can clearly see what the market makers are doing. They're grabbing liquidity from lows and making new highs. This is bullish order flow. Grabbing liquidity from lows and making new highs. Grabbing liquidity from lows and making new highs. All meanwhile, every single manipulation window, they're setting a liquidity trap above highs. Okay. So when we push down into this London session, all I was saying to myself was most likely what we are doing is the banking institutions. Look at this London session right here. Now let's go into the lower time frame. Let's go into the 5 minute. Okay. Here's that blue area of interest highlighted from the previous London session, the previous New York session, the average buy-in price at 42.5 cents extended all the way to the right-hand side. Now we have the manipulation window in detail during the London session. What were they doing? They left behind liquidity above highs. During their manipulation window, we see they also set liquidity beneath lows. Okay, so we have the same thing: liquidity above highs, liquidity beneath lows. Now let's go down to the 3 minute chart. I really want you guys to see this. This stuff is insane, man. I really don't know how people don't know this. Maybe it's just because the market is so saturated into believing that support resistance, order blocks, and all this crap exists. It's all rubbish. Okay, so now going down to the lower time frame, now we're on the 3 minute chart. We have the higher time frame perspective. What are some things that we know about the market? We know that previous sessions are grabbing liquidity from lows and making new highs. So we are printing bullish order flow. So until those areas of interest that we've highlighted, i.e. this 15-minute area of interest, this blue box breaks, we are respecting bullish order flow. So we're going to be looking for buy positions. Why? Because until this blue level breaks, which is at 42.5 cents average buy-in price, we know that the market makers have been buying consistently for the past 4 days at this level. Okay. We also know that previous to this session, every single session London, New York, and Asia have been leaving behind liquidity above highs during their manipulation window. So we have logic to target those areas via if the bank and institutions cannot make new lows. Okay. Now coming into the fractal nature of things, during this London session, we see the market makers build liquidity during their manipulation window above highs and beneath lows. These are all catalysts to sit on our hands and wait for this pattern that I teach you guys on the YouTube channel and in extreme detail on the CYPRX course material, okay? Which is what? We come out of the manipulation window, we break into that 42.5 cent psychological level. Now I want you guys to pay attention to the pattern, okay? Here's the low, the liquidity trap right here. You see the market start to create this friction around 42.5 cents. We grab a low right here. So we wick through the liquidity beneath this low and we make a new market structure high. Okay, so this is the market maker pattern that I teach you guys to identify, which is right here. We see a low, we see the market makers violate that low, and then we see them make a new market structure high. Here's the pattern right here that I teach you guys to identify. Now we know, okay, based off a couple different things, based off the higher time frame analysis and coming into this session, that we are looking for buy positions. So once we see this market maker pattern, how do we know this is a market maker pattern? Because we know that they're the only people with the amount of money that can manipulate price in their favor to liquidate over leverage buy positions and activate stop losses, and also activate sell stops beneath this low to give themselves a discounted price to then take their buy positions. They're the only people with the amount of money to move price. When I bought price action this morning, I did not have the amount of money in my account to move the market this way. Only the whales do. Only people with millions and billions and trillions of dollars have the amount of money to move the market like this. So when we see this pattern and we have all of the other confluences pieced together that I just covered for you guys, we know that it is a higher probability trade. Remember, it is not guaranteed. It is a higher probability trade to now say to ourselves over here to the right-hand side, when the market makers push price into discount, we're going to look for a trend continuational pattern to get in on buy positions at higher lows. We know that the market makers cannot put in one buy position at this area after they've liquidated lows and moved price to new highs. We know that they have to add to their order multiple times. They cannot just put in one order. So as retail traders, it favors and behooves us to get in tandem with what the market makers are doing. Based off of every single thing that I've told you guys so far, we can clearly see this pattern happen. So now that we've seen this pattern happen, we know as CYPRX traders that over to the right-hand side, somewhere in the future, we are most likely going to get a discounted price. Now, what tools do we have over here to utilize to determine that discounted price? I've told you guys multiple times, this Fibonacci tool right here is not utilized to guess some unrealistic bullish moonboy price prediction. The Fibonacci retracement tool, if you have the correct settings, can be utilized to determine where discount price is going to be from where the bank and institutions bought from previously. So taking our Fibonacci from where we see the bank and institutions or the whales or whoever is in charge of this QNT market right now inject money into the market from the low to the high and extend that over, we can see where we can get in as in the form of discount as retail traders. So if I was just to replay this price action, okay, I tell you guys that you can confirm a Fibonacci retracement on your charts once the market has retraced 25% of the previous bullish rally. So does this look like a 25% retracement to you? Absolutely. This whole entire candlestick is at least probably 50%. So let's just measure this out. Okay, so once the market retraces at least 25%, which would be here, halfway between 0 and 50%, you can seek to draw your Fibonacci on for a potential retracement, okay? And you're looking for the market to give you a discount into 62%, 70 or 79% discount to add on to what the bank and institutions are doing. Now you can only assume that the bank and institutions are going to add on to their position based off of the entire previous market analysis that I gave you to the left-hand side, where we know if they do not break this blue level, they are not creating new lows in the market. They are constantly grabbing liquidity from lows to build themselves the momentum and volume that they need to make new highs to come and target higher areas of interest that they've left behind during the manipulation windows above highs. We can see here, all these highs here, they were seeking to target, okay? So Back down to the fractal nature of things, how I was able to scale into this position was once I saw the market fractally grab lows and make new highs, I simply just took my Fibonacci tool from the low to the high, extended that over, and I simply just waited patiently and sat on my hands. Now, personally, like I said, my window of opportunity to execute during London session is anywhere between, let's just say roughly 2 to maybe 4 a.m. at the latest. Okay, 4 a.m. at the latest. And you can see here, when I entered into the market, look down at the bottom of my charts, was around 2:30 in the morning. So 2:30 in the morning, Pacific Standard Time, right there is when I executed my trade. So we see the market push down into, let's just say almost 100% discount. Once the market respected these 3 bullish candlesticks, watch them print, I was like, okay, cool. We are now creating a bullish order flow scenario where the market makers are failing to make new lows. So piecing everything together that I've given you guys up to this trade, I had the confidence to say this is a high reward, low risk trade. High reward, low risk trade. That's what you're looking for in these markets, okay? You're not looking to expose your capital via high risk. You're looking to give yourself the best bang for your buck, okay? So placed an entry at around 2:30 a.m. And as soon as 2:30 a.m. hit, again, like I said, I try to give you guys those little gems on when it is that I enter and exit in trades. The CYPRX students know that the market is manipulated via certain times, via certain sessions, and I've given them all that in specific detail in the course material. Like I said, I try to drop you guys a little gems here and there on the YouTube channel. I don't go into extreme detail because that wouldn't be fair to the students, but the students know why I'm executing trades at this specific time, okay? And we can see how that all played out. Immediately put my trade into profit. I pumped about $7,000 into QNT here and walked away with about 20% overall, which was roughly after fees around $1,350. So, you know, a quick $1,350 flip, took that money out of QNT, right? And I'm looking to reallocate those funds back into the market if we do see a depreciation in value underneath of, let's say roughly around $42.5. Okay. So you guys can see how this trade played out. All right, profit was hit. All right, we're looking for a Fibonacci extension of a 200% because that came into fruition with what? The liquidity that was left behind during the manipulation window prior to the London session open, which I've covered for you guys multiple times, okay? So all in all, very easy trade. CYPRX confluences to the T. We have psychological levels. We have manipulation windows. We have proper Fibonacci discount. We have the market maker pattern identification that I teach you guys on the YouTube channel. We have bullish order flow prior to this session split or prior to this London session. All right. Every single thing that I teach you guys on the YouTube channel, if you're here from Twitter, and every single thing in extreme detail that I teach you guys on the CYPRX course content plays out in almost every single market that you can fathom. Commodities, indices, stocks, forex, crypto, it doesn't matter. Okay. The market makers are manipulating this market on a consistent basis to give themselves the most discount and premium ranges. And you can identify this via price action. Now, price action is not the only thing that will make you, or sorry, excuse me, that will give you a consistent and rising equity curve. You have to be able to control your emotions. Why? Because when you see this type of price action, let's just say, right, prior to this, I just want to completely wipe out the charts, okay? When we have no drawings on our charts, and let's just say we were operating in this London session, what would the average retail trader think here? The average retail trader, without the entire market analysis that I just gave you, okay, would think that this market is about to dump. Why? Based off of a couple of different things. Most retail traders have their charts set to red and green candlesticks, which number one is a manipulation move on your behalf because your brain naturally reacts to the colors red and green, which is why I have my bearish candlesticks black instead of red, okay, because it helps my brain not chase bearish momentum, all right? Not only that, but we see these nasty bearish candlesticks, 9 times out of 10, retail traders are over leveraging sell positions or they're selling QNT based off of fear. We know that this market is moved based off of fear and greed. The banking institutions do not trade that way. They trade, based off of logic, liquidity, and the most premium and discounted ranges that they can give themselves. Okay. So if we know those things as retail traders, upper hand or an advantage in this market just based off of a little bit of technical analysis, knowing logic in this market, and controlling our psychology. Controlling our psychology means being patient and not reacting emotional to the markets when we see bullish or bearish impulsive moves, okay? When we see a bullied push in the form of a bullish move or a bearish move into an area of previous liquidity, right? For example, we have this little tiny consolidation here. When we see the market makers dump into an area, 9 times out of 10, as retail traders that trades the CYPRX methodologies, we know what the market makers are doing. They're giving themselves discount. They do not forcefully push the markets like this on accident. They do this on purpose, and it is to give themselves discount, as you guys can clearly see, okay? So when I wipe all the drawings away and when there is no technical analysis, it's a little hard to kind of see what it is that we're seeing here at CYPRX in the markets. But when you can piece the things together that I've taught you on the YouTube channel or in the CYPRX course content, and you can implement patience in this market, because if we measure from this London session open to where I entered into the trade, that was almost 2 hours and 30 minutes into this session. How many traders would be able to sit here and look at their charts from London session to 2 hours and 30 minutes into the session and be patient enough to wait for all these confluences to play out to then place a profitable trade? 90% of people won't do that, which is why 90% of people fail. They have no patience, they have no maturity in this market, and they're constantly just looking at the next trader next to them for what it is that they're doing. They cannot formulate their own analysis. Number one, because they don't have a strategy that teaches you how to do so. And number two, because they're so worried about what everybody else is doing in this market that they cannot consistently find profitability in this market. I hope that this breakdown helped you guys out. I'm going to go enjoy the weekend with my family. I thought that I'd provide you guys with some value, showing you guys a trade that I placed on QNT. Again, made about 20% on this trade. If we just measure from the low where I entered in at up to the high, roughly around 20% gains on the overall initial investment. We tapped into about $51 psychological level. I pulled profit once we made this lower high right here. Now, I'm not sitting here saying that QNT is going to go higher or go lower. Personally, I think that the market is still, you know, a little bit skeptical right now. There's still a little bit too much fear. And we also see, let's just go to the 1 hour chart. Okay. This for me personally looks like a buy trap. Okay. This for me looks like they're building liquidity beneath these lows in the form of retail support. And they're going to come, they're going to liquidate these lows and then go higher. I could be wrong, right? Who cares? Because guess what? What I just did is I made an extra $1,350, excuse me, that I can pump into the market at any given point in time, right? If the market does go bullish from here, what I can do is if the market flips bullish and starts to create bullish order flow, I can seek to get in somewhere over here to the right-hand side, because I know that the market can't just go up forever. It's going to have to pull back somewhere over to the right-hand side, and I can seek to allocate that profit that I just made somewhere over here if the market does give me a higher low, to then take the market higher. So that's what I'm looking to do. I'm either looking to reallocate that profit back into QNT if the market does flip bullish, if we get a scenario set up, or if the market goes lower, I'll be looking to allocate that profit underneath of $42.50. Okay. So blessings to you guys all. I hope that you guys enjoyed that video breakdown. Very easy to kind of comprehend. I hope that the way that I, display price action to you all is easily digestible.
Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, go.